Hello, this is Christy Muro, and today I want to answer a question a customer asked me. Why does SAP post some amounts to the price difference account on an AP invoice and not debit the full amount to the inventory account? The customer is using the batch valuation method, and I looked into how SAP handled this. In this video, I want to show you exactly why this happens and how SAP calculates the cost for batch managed items. So let's get started. First, let's check that I have the correct settings in the item master data that I'm going to use. So I'm going to go to inventory, item master data, and the item that I'm going to use is this guy here. And as you can see here, we're going to manage by batch the item. And then if I go to the inventory data, we have set the valuation method as serial batch. So we have the correct settings in the items, and now I'm going to start creating the transactions. The first transaction that I'm going to create is the AP invoice. So I'm going to go to purchasing, AP invoice. I'm going to select our vendor, the date, and I'm going to select the item that we are going to use. The quantity that I'm going to use for this example is 10, and the first price that I'm going to use is $10. Okay, so I'm going to go ahead and create a transaction. And because this is a batch control item, I need to type the batch number. I'm going to use the 125. Okay, and create the transaction. Okay, after I have my first AP invoice, let's go and check the journal entries. I'm going to go to the accounting tab and click on the journal remark arrow. And as you can see here, the system debited $100 in the inventory account. This is good. And now I'm going to check the cost of my batch. I'm going to right click and select batch number transaction report. And I'm going to open my batch. And the cost of this batch is $10 after my first AP invoice. So, okay, I'm going to minimize this one. And now I'm going to run a report. I'm going to go to inventory, inventory reports, batch and serials inventory audit report. I'm going to run the report for batch 125. And as you can see here, we have our first transaction, the AP invoice, quantity 10, and the value $100. Okay, I'm going to minimize this one. Now I'm going to create another AP invoice, same vendor, same item, same quantity, but in this case, I'm going to use a different price. So I'm going to use $20. Type the batch. I'm going to use the same batch. Yes, update, okay, and view. Okay, when I created the second transaction, the SAP reevaluate my item. I'm going to run my report again so that we can see the reevaluation. Okay, if I run the inventory audit report, as you can see, the cost after the first transaction was $10. But then when I created the second transaction, SAP said the new cost, which is $15. Why $15? Because now the amount is $300 because it was $100 for the first transaction plus $200 for the second transaction. So as you can see here, 100 plus $200 makes the $300. $300 divided by 20 makes $15. So $15 is my current cost. Now I'm going to create a third AP invoice. Same vendor, same item. Now I'm going to set quantity 20 and price 0. Let's see what happens if I have this invoice with price 0. I'm going to create a transaction. Batch 1 to 5, yes. I create the AP invoice. And let's check the journal entry. So if I go to accounting, as you can see here, we have 0 in the inventory account because the price was 0. So I'm going to hit OK, minimize this screen, and I'm going to run again the report. Now we have a third transaction. So now, as you can see here, the value of that transaction was $0. But again, the system is going to reevaluate all the inventory that I have in the system. So now, the value that I have in the system, including all previous transactions, is $300. And the quantity that I have in the system for this item in that batch is 40. So 300 divided by 40 makes 7.50. So 7.50 is the new cost of that batch. If I open the batch number, you will see that now we have 7.50. This is my current cost after the third transaction. Now I'm going to create an AR invoice. So here I'm going to create my AR invoice. We're going to select the same item. And to make it simple, I'm going to select only one quantity, and the price, I'm going to set price $20. And I'm going to create a transaction. I'm going to select the last batch number and create the transaction. Let's check the journal entry. In this transaction, SAP credited 7.50 to the inventory account and debited 7.50 to the cost of goods sold account. So up to this point, everything is fine. I'm going to run the report again. Because I closed it, I'm going to go to inventory, inventory reports, batches and serial inventory audit report. Now we have the AR invoice where the system used the cost $7.50. Okay, now we're going to create another AP invoice. Here is where things get interesting. So I'm going to select our vendor, the item, the quantity. Here in this quantity, I'm going to type 10. I'm going to use 50 for the price, and I'm going to create a transaction. 1 to 5. Keep in mind that the cost so far is 7.50. So I'm going to create it. Now let's check what is the journal entry that the system created here. In theory, SAP should debit the full amount from the AP invoice. However, it didn't debit the entire value. The reason is that, as you might remember, we already sold one unit earlier. Because of that, the system no longer has the full quantity in stock. So SAP will only post the amount related to the quantity currently available in inventory. Let's analyze this in the batches and serial inventory audit report. Okay, the first transaction that I created was an AP invoice where the quantity was 10, the price was $10. So the total was 10 times 10, it was $100. So the current cost, basically the way that SAP calculates, is 100 divided by the quantity, $10. Then I created another transaction, but in this case it was quantity 10, price 20. So the value of that transaction was 20 times 10, $200. Okay. I'm going to add 2 more columns here. I'm going to add cumulative quantity and cumulative amount. So after the first transaction, the cumulative quantity was 10 and the cumulative amount was $100. But after the second transaction, this was 20 because it was 10 plus 10 makes the 20, and then the amount was 100 plus 200. So here is $300 after the second transaction. Now the average of these transactions is $15. So after the second transaction, the cost was $15. Then I created another transaction where I used quantity 20 and the price I set it as $0. So the total of this transaction was 0. The cumulative quantity is the total of the quantities from all 3 invoices, which is 40. And the amount is still 300 because the last transaction was 0. So 300 Now, when we divide 300 by 40, we get 7.50. At this point is when I created the AR invoice, and it's when SAP used the cost 7.50. After I created my AR invoice, I created another AP invoice. The quantity was 10 and the price 50, so the total of that transaction was $500. To calculate the new cost, SAP doesn't just look at the quantity you still have in stock. Instead, it goes back and checks all the previous AP invoices linked to that batch. It sums up the total cost amount and the total quantity from all those entries. Then divide the total cost by the total quantity to calculate the new average batch cost. Once SAP has this new cost, it updates the batch cost. But before it's done, SAP also checks if there were any AR invoices or good issues related to that batch. If it finds that some quantity was already sold, it compares the old cost used at those transactions with the new cost it just calculated. Let's go through the calculation for this example. I created one AR invoice with a quantity of 1, and at that time the cost was $7.50. Now, after the new AP invoice, the updated cost is 16. So the difference is So the difference is 16 minus 7.50, which equals 850. Since the quantity is 1, we multiply 8.50 times 1, and the total difference is $8.50. In my case, there's only one AR invoice, but if there were more, SAP will calculate the difference for each one and then sum them up. That total difference is posted to the price difference account. And the remaining amount, the total transaction value minus the amount sent to the price difference account, goes to the inventory account. In my example was $500 minus 8.50. So this amount, the 491.50, goes to the inventory account. Now I'm going to show you where SAP is going to take this price difference account. I'm going to go to the GL account determination. And this is the account SAP uses to post the difference between the new cost and the old cost since the inventory no longer exists. So let's go back to the original question. Why does SAP post some amounts to the price difference account on an AP invoice and not debit the full amount to the inventory account? In SAP, when you use the serial batch valuation method, all marketing documents that impact costs affect the entire batch, not just the items currently in stock. This includes items that have already been sold, which is different from other valuation methods like moving average that only consider stock on hand. Whenever a marketing document changes the cost of a batch, SAP recalculates the cost for the whole batch. If some items in the batch are still in inventory, SAP posts the difference to the inventory account. But if some items have already been sold, the difference is posted to the price difference account because that stock no longer exists in inventory. This ensures that your batch cost remains accurate and your financial accounts reflect the true cost of both sold and unsold items. And that's it for today. Thank you for watching.